What's up traders, welcome back. Today I'll be sharing a simple and organized way to go about analyzing your watchlist or whatever market you are following. We will be utilizing our trading plan, so let's go. The first thing on the list is to define your trading range. The purpose of that is to be able to identify your premium and discount prices, which will help you to know which direction to anticipate. So this is how you frame them. On your chart, you have to wait for price to take out both buy side and sell side liquidity. After that, you have to measure and mark the 50% level from the highest swing that was formed to the lowest swing that was formed after taking out sell side liquidity. You can use the Fibonacci tool to do that. So now you have defined ranges from premium to discount. On top, which is premium, you look for sell setups, and on the bottom, which is discount or cheap price, you're supposed to look for bullish setups. So let's plot this on our chart. We are back on nasdaq. So we need two sweeps from both sides. So we swap sell side first and then buy side. So that provides us with a dealing range. There are two ways to draw this, but I'm gonna stick to the easiest method, which is this one. So you have to plot the 50% level and leave it on the chart until we trade away from the range. So let's see what took place on this trading day, where the market consolidating the whole day until the news event occurred at 8:30 New York time, which is 2:30 in SA time. They have used the news event to run the stops above this equal highs, which is also internal range liquidity. So they ran the stops above and expanded below. You will see this properly on the lower time frames. So let's look at the 50-minute time frame. So with our classic setup number 2, which is in this video, which contains a liquidity run, a market structure shift, and a fair value gap for entry. If you haven't memorized that entry pattern, watch that video. So you need to remember this. When you enter a trade in premium to discount or vice versa, for a high win rate, you need to target the low hanging fruit, which is the 50% level, or the first swing or fair value gap that you meet in discount or after the 50% level, because the 50% level is also a good level for entry setups, so the market can reverse from there. So let's see what happened at the 50% level. We had the same pattern repeating itself in the opposite direction. The only difference is that in this case we had a lot of confluence. We had the 50% level, the two swings in discount, and the overnight session setup, which is covered in the previous video. So where is your low hanging fruit in this case? Is the first swing in premium, which is also coincidentally the high of the overnight session in this case. You can also target the external liquidity of the range. So there you go guys. It's a 3-step plan. You have to define your range, use time and price, and you can also consider the news events for time. So for indices, is your high or medium impact news events, or the New York Stock Exchange opening time at 9:30 New York time or 15:30 in SA time. The aim is to find volatility. So for currencies, focus on the kill zones and look out for the news events too. So that's it for this video guys. Like and subscribe if you appreciate the content. Otherwise, I'll catch you guys in the DMs. Until we meet again, das wird dann hier.